Hey everyone, this is Patrick from Bloomberg Capital, and today we want to update the Alibaba chart. Since our last video, which was a bullish indication, we expected prices to go up, and that they have done very well so far, actually. And let me just show you what we said in last video. I didn't update the chart at all. In the last video, this price was breaking up. It was around here, and we expected a pullback and then a push to the upside. Now it has fairly well outperformed this projection even more because there was no pullback. But this isn't too bad. So if you're thinking like I'm probably chasing this move at the moment, and there's not really a good point to get in anymore, I would say the opposite. I think this is a base for much higher prices yet to come, and we still can take like the measured move from high to low of this range. And this should be the minimum target. Okay, so we should still go to around 270, which is just about the all-time high if I zoom out on the chart here. But this is the minimum target. And here we could form a small range, maybe a flag, right? And then this would extend from the breakout level to the flagpole to the upside again. And this would be, I would say, a fairly good target for the long term. So I do think that Alibaba is still going up and it should keep on rising. Now, if you waited for the pullback and couldn't get in, that's not an issue in my opinion, because this suggests that this stock is much more bullish and the pullback or a reaction should come. And today we had somewhat of a reversal day. If I zoom in, you will see that we tried to push up here, failed 3 days in a row, and closed that gap here from the 1st to 2nd of October. And now we're coming down. Okay, so depending on where this move finds low, I suspect we're going to come down until this price over here at 168. This is going to be the make or break point, because if we see that this is a very tight range that doesn't break down, that's why I would say this it would be a risk entry. However, if we break up again, this would be the safest entry possible in this current range, and I would say it's the best risk to reward entry as well. Why is that the case? Well, if you enter here, you didn't have to deal with all these drawdowns, because if you compare, they're fairly deep, right? They almost retrace everything. You can see it here. This was a 10% decline from a, what was that? A 13% move. So you gave it all back. Here we can visually see that we almost gave it all back again. This was a magnificent pump. We gave it all back. Now it starts getting better over here. So better rally than this one. And then we got a violent decline, but look, it's becoming better, right? And the next rally really knocked the socks off, I would say. So if this decline is better, this would be the most risk to reward entry, like the highest risk to reward there. Because if we can manage to identify the low over here and enter at this price, we have the lowest range between the entry and stop loss, which would really be a big change from what came before. Before, it was very volatile, and over the past, I would say, that's from February or January until I would say September. That's it's quite a long range, right? So you didn't really outperform the market with that, especially if you held through this. Now it looks different, right? Because where the price has gone up, but if you are here, you don't have a guarantee that it's going to go there, right? This is only what we know from the retrospective analysis. Hindsight is 2020, as they say. But now, if we form a range and we can buy a breakout here, this would be the stop loss. And since the drawdowns are going to become less, you can be rewarded with instant more possible gains, because the pullbacks are not going to be as steep to the downside, and this is simply going to get rolling. So in terms of risk and opportunity cost, this would be the perfect opportunity in this entire trend. So we don't really care about if we buy or bought around the bottom. I think I was involved around here, and you can see it's a painful journey. Okay, it's super painful to long here. You don't know if this is going to make a new low or not. So if it even made a new low and you got stopped out, you wasted the entire time. But this one, you don't. You are the most efficient. So I would say this stock has so much potential and it's just about to go up. And therefore, this is what I would be looking for and looking for very eagerly. I also do plan on swing trading this. So aside from my investment entries, this is going to be where I'm going to put in the most leverage and also the tightest stop loss here, right? So this is what my plan would be. Hopefully you liked this video. I know that there's not a lot of editing in this one involved. That's just simply due to us traveling at the moment. There's not a lot of time for editing. So hopefully you excuse the lack of quality in this video. All right. I'm Patrick with Bloomberg Capital. I'll speak to you next time.